And the bond report, Rick, that 10-year Treasury, that yield is like a cat whisker above 4%.
And it seems to always be a cat whisker above or near 4%, and then it seems to move away several occasions. And why is this so important? Well, Brian, I'll tell you, 4% is a huge psychological level, and the Fed could talk about manipulating and quantitative easing and SOMA, but in the end, the market has a voice. Look at the April 10-year chart. And the reason, of course, is because that's the low yield close of the year in early April, basically right at 4%. And, well, if you look at the intraday chart, we touched it a little after 6 a.m. in New York. We touched it briefly on September 19th, and every time we seem to touch it, it seems to move away from it. But notice the scaling here. What is the range? Basically 5.5 basis points today. Now let's pair the Dow on top of that, which currently has about a 1,100-point range against the 5.5 basis points in tens. My point here is that all this volatility in equities isn't translating to much volatility at all in treasuries. And to think that all this is going on and we can't keep that volleyball below the water surface of 4%, I think is very telling, especially when the Fed seems to be talking so dovishly. And finally, another dovish, illogical market is the dollar index. Now, it's not right at the highs as you see on that monthly chart from the beginning of October, but it's hovering very near the highest closes since the end of July. Brian, back to you.